Hello everyone, this is Shubhankar and welcome to Everything Has a Story, where I share stories with you which the numbers are trying to tell us. And the numbers we'll be looking at today are for ITC Limited. You'll find a link to this Power BI report in the description as well as a pinned comment. Please use a laptop or a desktop to access this Power BI report because it has been optimized for the same. So when you click on this button here, you'll land on the contents page and here you can see all the reports I've included in this Power BI report. So let's click on the next page and this is where the story begins. Here you can see the majority of the revenue for ITC on a regional basis comes from India, right? Moving forward, and here we can see the various business segments of ITC: cigarettes, FMCG, other than cigarettes, paper boards, paper and packaging, agribusiness, hotels, others. And here it is very clear that cigarette business happens to be the biggest contributor to ITC's revenue. Going forward, here you can see the ranking of each of the segment in terms of contribution to the revenue of ITC, which we can see has been constant ever since 2016 all the way to 2023. So let's proceed. Here we can see the segmental results. For this, we have to look at the annual report of ITC. So this is ITC's annual report for the year 2023. All you have to do is go and search segment result, enter. So next. This is for the standalone report. So here we can see that segment results represents profits before finance charges, unallocated corporate expenses and taxes. Unallocated corporate expenses mean it includes revenues as well as expenses that relate to initiatives or costs attributable to the enterprise as a whole, right? Which means that this segment results is actually EBIT, earnings before interest and taxes, and also unallocated corporate expenses, which means expenses or incomes which can't be directly attributed to a specific business segment. And this is the consolidated segment reporting of ITC. Here you can see the various business segments and the contribution made by them to the revenue of ITC, right? Here you can see the total. We won't be taking the inter-segment, and the reason behind it is this is the consolidated statement of profit and loss for the year 2023 of ITC. You can see the revenue from operation. Here's the notes are 22A and 22B. For 22A, note 22A, here you can see. So here you can see the total revenue. Here you can see the gross revenue, and here is the other operating revenue, which includes government grants. Similarly, for 22B, you can see this is the total here, right? This is the total here, and this is the total here. And that is the amount here. You can see even here the inter-segment amount has been reduced. Then you can see here the segment results, right? Which means the profits for each of the segment, which can be actually attributed to a specific segment. So this is what this chart is trying to tell us about the segmental results. Here we can clearly see that the cigarette segment happens to be the biggest contributor to ITC's profits. Moving forward, here you can see the ranking of each of the business segment as a contributor to ITC's profits. Let's click on the next button. Okay, here to understand, let's select a business segment, let's say cigarettes. So you can see cigarettes has the contribution of cigarettes to the revenue of ITC happens to be for the year 2023, 41.2%, whereas its profit contribution happens to be 75%. You can see the profit margins for the cigarette business. Earlier it was 36.3%. Now it's 60%, right? It needs 12% more to actually go double from here, right? Then we can look at the hotel business. Here you can see the revenue contribution as well as the profit or loss contribution, right, for the year 2021, which means for the COVID period, the hotel business did suffer a loss of 85.5%. So let's move forward. Here you can see the segmental ranking, the segmental revenue ranking, and the segmental result ranking, right? Here we can see that cigarette has been the biggest contributor in terms of revenue as well as the profits. But you can see the paper boats happen to be the second highest contributor in terms of profits, right? So we'll be looking at FMCG others and paper boats, paper and packaging. Here you can clearly see that FMCG other comes on top when it comes to revenue, but the positions are reversed when it comes to profits, right? Going back to the previous report, what we are going to do, we are going to select FMCG others, and while pressing the control button, I'm going to click on paper boards, paper and packaging. You can clearly see for the revenue contribution, the revenue contribution by the paper business happens to be low in comparison to the FMCG others, but it is again reversed here, right? The profit contribution from the paper business is much more than the FMCG other business. Here you can also look at the profit margins for the paper business. Earlier it used to be 17%, today it's 31.7%. For FMCG other, it was 0.9%, which has gone all the way up to 7.26%, means more than 8 times. So let's move forward. We have already covered this. So segmental profit contribution. What we are going to look at is this. This is the EBIT contribution, the profit contribution, and the revenue contribution. So when you click on 2023, here you can see for the cigarette business, the cigarette business has been contributing roughly 75% to the profits of ITC. Whereas when it comes to revenue, here it is contributing more than 41%, right? And you can see the others. What we are going to do is select everything other than the cigarette business, because when we select the cigarette business, you see how the chart looks, right? So now we can clearly see that the profit contribution for both the agri business and the FMCG business happens to be the same, but the revenue contribution is much higher here, right? The size of these bubbles actually represents the profitability of the business segment. You can see it's 11.17%, whereas here it happens to be 31.71%, the second highest apart from the cigarette business. So what we are going to do next is select 2016 as well, and here we can see the pattern now. So here we can see for the hotel business, from the chart itself you can see it has gone a bit right, which means its revenue contribution has increased, and also gone a bit up, which means its profit contribution has also increased. So whereas in case of the agri business, we can see it has gone a bit right, which means its revenue contribution has increased, but it has actually gone down, which means its profit contribution has decreased. Here we can see for the paper business, it has gone only a bit right, which means the revenue contribution hasn't increased much. But when you can see it has gone way up, which means its profit contribution has increased drastically, but not as drastically as for the FMCG other business. Now let's move forward. Here we can see the segmental assets. So coming back to the segment reporting, here if you scroll down a bit, here you can see other information, the segment assets of each of the segment, right? But what you have to notice is that there is also a portion of unallocatable assets, and this happens to be the total assets. So this is ITC's consolidated balance sheet for the year 2023. Here you can see under assets, the total assets happens to be 85,882.98, same as the total here. The only thing you have to keep in mind while looking at the Power BI report is that there is also a portion of asset that cannot be allocated to a specific business, right? Also, if you scroll down a bit here, you can see the geographical information from where I got the data for the very first chart in the Power BI report. So now that we have already seen the segment reports, here we can see that like for the year 2023, let's see 17%, let's select cigarettes and hotels, right? Here you can see both of these segments have similar amount of assets, right? Only the difference there is only of 0.04%. Please keep that in mind. So let's move forward. Here we are going to see the ranking for the same. Yeah, you can check it out on your own. Going forward. Okay, here's the revenue segment. Here's the assets, right? So if we look at for 2023, here we can clearly see that the 17.59% assets of cigarette is actually contributing 41.24% to the revenues of ITC, whereas the similar amount of assets allocated to hotel business is only contributing 3.52% to its revenue. Going forward, earlier we were looking at the revenues, here we are looking at the profits, right? So again for the year 2023, we can see that the same assets allocated to the cigarette business is actually contributing 75.42% to its profit, whereas the similar amount of assets allocated to the hotel business is only contributing 2.23% to ITC's profits. So this is one of the major reasons why any changes for the cigarette business affects ITC in a major way. So going forward now, here you can see the ranking for the assets, the revenue, as well as the profits, right? You can check it out on your own. Going forward, we'll be looking at asset turnover ratio. What does this actually mean? So let's say we selected the cigarette business for year 2023. There happens to be roughly 8,000 worth of asset, which is actually helping you make 32,000 worth of revenue, right? Which means 4 times. Here you can see 4 times. So this is what the asset turnover ratio represents. This also means that the cigarette business happens to be a very asset light business. Whereas if you look at the hotel business here, right, side by side, we can see the same amount of assets allocated to both of them. But one is contributing 32,000 worth of revenue, the other is barely contributing 3,000 worth of revenue, right? So that is the reason why there is a difference between the asset turnover ratios as well, right? Here we can clearly see that the hotel business happens to be a very capex heavy business. Going forward, earlier we were looking at the revenue, here we will be looking at the profits, right? So again, the cigarette and the hotel business, we can see the same amount of assets, but one is bringing you more than 200% of profits, right? 8,000 and 19,000, right? So means more than double. You can see, right? Cigarette business is bringing more than 200% worth of profits, whereas the same amount of assets allocated to the hotel business is actually only bringing 7% of profits. So going forward now, you can see all the essential ratios in one page. You can go through all of this on your own, right? And welcome to the very last report in this Power BI report. So we'll be selecting the year 2023. Here we can see that the amount of asset allocated to both the business of cigarettes as well as hotel is same, right? 17.5% here, 17.5% here. But the profitability, right? You can see the difference, the size as well as the margin. You can see, right? The return on assets here is more than 200%, whereas here barely is 7%, right? So again, we are going to select everything other than the cigarette business, and here we can see the position of each of the like businesses, right? We'll also be selecting 2016 here, and here we can see the changes, right? For the hotel business, we can see that the amount of assets actually, the asset allocation to the hotel business has actually decreased, whereas the profit contribution has actually increased, the profitability has actually increased. Here we can see for the paper business, the asset allocation has increased slightly, but the profitability has increased significantly. But the most drastic change you can see happens to be for the FMCG other business. So what does all of this conclude? That ITC somewhere or the other is focusing on the FMCG other business a bit more right now. So in one of my previous videos, I've already shown how I was able to calculate drawdown using Excel as well as Python, right? So we'll be referring to the Python numbers here, right? So if you scroll down a bit, you can see the data happens to be from 1996, right? This is very important. So over the last 27 years, you can see that the return given by ITC happens to be 8,684%, right? And the CAGR happens to be 11.86. Going down a bit here, we can see, okay, win days, right? So win days in terms of days, right? The winning chances of ITC happens to be 50.91%, right? Whereas on a monthly basis, it increases actually to 58.31%. And so is the case for the quarter as well as year. Now we'll be looking at the drawdown periods, right? What does drawdown periods actually mean, right? We did see that if on a yearly basis we see on a year-to-year basis, there is a 75% chance that ITC will give a positive return, right? This means that. But when we look at a drawdown, you can see the worst drawdown witnessed by ITC happened to be 57.01%, and so was the second, like 54.02%. If you do want to understand this, please watch the video I've created on how to like calculate the drawdown, right? So we did see that there is a 75% chance of winning, right? And this happens to be for 27 years, all the way from 1996, right? 2023. So what we are going to do here is we are going to add the top 5 drawdown periods here, and then we are going to divide this by 365, right? So here we can clearly see that if you did make the wrong investments at the wrong time and didn't do any kind of SIP, you would have been stuck for 15 years in this stock. Right, so this is trading view. Here we can see that ITC is at an all-time high here right now, right? So this makes this drawdown calculations much more relevant. Okay, see, please understand, anything being said or shown in this video happens to be only for educational purpose. Nothing said here is any kind of investment recommendation. So we did see that ITC happens to be at an all-time high right now, right? So this here is a cautionary tale that why one should not invest into a stock or anything when it's at an all-time high, because there are chances of drawdown. So here I've also calculated a drawdown for the Nifty 50 as well. So we have to understand whether the drawdown witnessed by ITC was its own fault or was it because the overall market was witnessing a downturn. We should also be comparing the cumulative returns of ITC as well as Nifty 50, the daily returns. We can also look at the average annual returns and the CAGR as well. But is it a proper comparison? No, because the data here happens to be from 1996, whereas the data only here is for 2007. So only for the last 16 years. So what I've done here, I've adjusted ITC in terms of Nifty 50 because the period for Nifty 50 was smaller, right? So here you can see now it is a proper comparison because the period here happens to be the same. So now you can look at the CAGR returns as well as the annual returns, the cumulative returns and the daily returns of both of these. Similarly, now you can check out the drawdown period for both of these because now I have adjusted both of these in terms of period. One thing you should notice that here I have hard coded some of the data, and the reason behind it is very simple. When we look at the lookup table here, we are going to select, let's say, just 9, and you can see there are 2 rank 9s. That is the reason why there is no rank 10, right? You can see no rank 10, state of 11, and the reason behind it happens to be very simple, right? Because both of these happen to have 84 days of drawdown period, right? So what I've done, because VLOOKUP actually only picks up the first data when it comes, so what I've done, I've manually in hard coded the other one. Also, in case if you're wondering, this is the raw data for ITC, right? But what I did copy pasted here the data for Nifty 50 and the dates here, and I've used VLOOKUP to pull the data from the raw data here for the dates corresponding to Nifty 50's like closing prices, right? Also note that I've used the adjusted closes in both cases. So to make it simpler, what I've done, I've created a new sheet altogether where I've copied down the drawdown periods for Nifty 50 as well as ITC side by side, so you can easily compare these. Also, I have created this drawdown chart here, and here you can see the average annual returns of Nifty 50, right? You can compare these side by side for each year. The calculation here are similar to what you must have seen in my previous video in how to calculate drawdown, right? Similarly, the CAGR calculations are the same. Here you can compare. So for the last 15 years, you can see ITC is winning, right? But when we look at the 10 years here, you can see Nifty 50 is higher, right? This is what the chart also tells us. So here you can also look at the cumulative returns for the last 16 years for both ITC as well as Nifty 50. So you can see high risk, high reward, right? ITC has given much more returns when compared to Nifty 50. Here you can look at the daily returns chart as well. Okay, so there's one more thing to keep in mind here is that, okay, so here we can see that ITC happens to be on top here, right? You can see Nifty 50 happens to be gray, right? So here you can see that you are not able to see the drawdown for Nifty 50. But when we change the positions, here you can see, but now you are not able to see the drawdown for ITC, right? This is how this is working. So I'll give you the conclusion. The conclusion here happens to be that for the recent years, right, 17 all the way to like 2022, the drawdown for ITC was much more when compared to Nifty 50. But in the previous year, you can see the drawdown for ITC was much less when compared to Nifty 50. And the result was because the market was facing a downturn. Similarly, when looking at the daily returns in the chart, when you change the position of both Nifty 50 and ITC, you can see how the chart looks, right? And that was the video, guys. If you did learn something new, please like, share and subscribe to the channel. And thank you for watching the video till the end.